let's broaden it out and bring in another voice. Bring in Santiago Ulloa, founder and managing partner at We Family Offices. Santiago, good to chat with you again. Thanks for joining us here. You just heard our conversation, which outside of the K-Web and Ant Financial largely was about domestic U.S. stocks. You are not a hater of the U.S. market, but you believe there may be better opportunities, particularly in Europe and Asia. Let's start with Europe. Where are you and your team finding value there?
Well, in general, we think that Europe has been left behind in this process, no? And there is a big gap between what the U.S. market has been doing and what the European markets has done. And the reality is, after the big support that the European Union gave to the countries in the south through this new bond guaranteeing from everyone, the situation in Europe is better in general. There are many companies inside Europe depending very much on the internal demand, not so much about the external, about exports, then they could do quite well.
Okay, so is there anybody particularly in Europe or a country in Europe that you think has been left behind more, that may present better value to our viewers and listeners?
Well, in general, the countries in the south, they are suffering much more from the COVID and from everything, but at the same time, the valuations are extremely cheap. We are talking about more about France, Italy, Spain, but the solid company, the solid country is clearly Germany. I would diversify. I wouldn't try to focus in one specific country. I would try to use some managers, the right managers, in order to diversify among the different countries.
All right, Stephanie Link, I know you got a question there for Santiago.
Yeah, Santiago, so I'm just curious, are you worried at all about the strength in the euro? As of late, we know it's up because, against the dollar, by the way, we know it's up because the economic data looks like it's getting a bit better, although now the viruses are actually getting a little bit worse. So I'm just curious about what you think a stronger euro would do for your investments in Europe.
Well, it could affect very much the exporters, the main German companies, the car dealer, the car producers, etc. But in general, I think what we are seeing is more a weak dollar than a strong euro. So the dollar has been very strong for the last few years, and I think we are changing the cycle right now, and we will see Europe in much better situation compared with where it has been in the last few years. So I'm not so worried about that. I think we are going to see the euro more or less at this level versus the dollar, but the economy is recovering faster than the US in this moment.
Now, we've talked a lot about China. Josh just mentioned the K-Web. Santiago, you like Asia. Are there other parts of Asia that are better investments than China?
Well, Japan is doing well. Southeast Asia are performing better. They could really get some of the sports than the Chinese will not be doing. But really where I'm focusing much more is in the domestic demand. I think in Asia in general, in China specifically, the demand is going to keep growing. They have been able really to manage quite well the COVID, and they are ahead of us in the recovery of the economy. I would clearly put some money to work over there for the medium long term. Also in technology, they are doing extremely well. But I'm much more focused in the private market than in the public market.
All right, Santiago Ulloa of We Family Offices, a great global perspective there. Santiago, thank you very much. Have a good day.
Brian.
All right, it is